Hi guys, this is the Daniel Ducote Trading Channel. I'm going to bring you some demonstrations to help hopefully increase your odds in the market and maybe give you a new perspective on how I trade. Maybe not how you trade, but how I trade. In this, I'm going to use some features that to me I think are really helpful for traders if they want to learn how to practice and get good at timing the market and entries and exits. One of those features is called on demand. What's beautiful about on demand is if you look, well, no, I don't say down here, but it is actually Sunday, so right now the market is closed. So the beautiful thing about that is I can play the market while the market is closed. The beautiful thing about that is I can choose a date and time. I can choose October, September, November, whatever date I want, and I can choose what time of day I want even to start and everything like that, and it simulates that day. It's basically a recording of that day, so all those trades that happened on the time that you choose, for instance the time and sales, the level 2, those were all real trades that day, that particular day, and it would give you an idea of what you would have done that day on the market, you know, on a real perspective to some degree. Maybe not 100% because your fills wouldn't exactly be the same, your average price wouldn't exactly be the same, and of course you got commissions too, so take that in consideration. So, there are some differences. Plus, you're in a live market, so your fear and greed and all of that really kick in harder because you're using your real money versus using paper money or digital fake money. But if you treat it the same way, you can still learn from it the same way. So let's get into the lesson for today. My lesson for today is moving averages. I really want to get into that because I think it's important that people understand that they're probably reading them wrong. The reason I say that is when you put your moving averages up, you'll look at them on all time frames. So you'll be looking at on the daily, the hour, the 15-minute, the 5-minute, the 2-minute, the 1-minute. But that gives you a false sense of confidence, and I'll show you why. Okay, so if I was trading, the only time frame I would worry about is the daily. Reason being is because it carries the most weight, and in the long run it's the only true place your moving averages really are, because when you're talking about a 200-day moving average, you're talking about 200 bars, 200 days, 13 movement EMA, 13 bars, 13 days, 50, 13 bars, 50 days. Whenever I go into a smaller time frame, that changes quite substantially because all of a sudden your bars that go back aren't quite as far, so if I'm on a 1 minute and I'm looking 200 bars back, I may be only looking back like 4 hours, and I'm getting a moving average on 4 hours of the actual day versus the day, or versus 4 hours in the correct terms of where the actual support and resistance is. So in a lot of ways you may be getting pushed down or pushed up into areas that you really don't want to be in. And the reason I say that is because our goal is to buy low, sell high, not buy high, sell low. Unless you're shorting, then you're gonna sell high, buy low. It's kind of the opposite effect. But let's look at our moving averages and how they change as they go down. So if I was starting the day and I really wanted to use the moving averages, I would find out where they're at. Okay, so we've got this one at 153. Okay, so I would put a line at 153. That's the high of the day. The 13 EMA, because I'm only working with the 200, 13, and 15. It's the only ones that's really worth messing with. Okay, out of any of your moving averages, really, that's what everybody uses, and you should use what everybody uses because you want to time yourself against them. So they are relevant, and if they're relevant, then you should use them. but you should use some other tips in between. This is just showing you how your moving averages can mess you up. Okay, this one is at the 126, so we want 126, put a line. This one is at 98, so we'll put one at 98. Alright, there's support and resistance for the day. Look at where your candle is coming from yesterday. You've got a doji right here. You're underneath the 13, you're above the 50, you're below the 200, you're squeezed. You know, you popped out, you come back in, you're squeezed in this. It's kind of like this one right here. They got squeezed kind of right in this area, and then it popped out. Alright, and I'm only looking at this portion. If I took you back a little bit, there's a pattern that's building that I could show you, but this is just about moving averages and how they can confuse you. Alright, so now we're going to go, actually, you know what, let's color these real fast. Red for the 200, white for the 13, and blue for the 50. Alright, so now we're going to go into a 4-hour. Alright, and as you can see, they've shifted quite a bit. Your 200 that was up here creating resistance is now down here supposedly creating support. Now remember, this is only a 4-hour chart. We went from 1 day to 4 hours, so we only cut this down, you know, into 2 slices of the day. You know, because think about this. This is 4 hours. This is 4 hours. Then you've got 4 hours of pre and post market. You know, so I mean, this is only 2 slices of the day, and we've already moved the moving average from 153 to 107, and that's on the 200. And vice versa on the 50, because if you notice, the 50 was down here and now the 50 is up here. So now where it was support, now it's supposedly resistance. You know, so our moving average is flipped around. The only one that's kind of close to itself is still the 13, but it's still below it. You know, if I put a line here, you're sitting at the top of this candle now. You know, so it's quite a big change. Now let's go and get into even a tighter time frame like the 30-minute. Now we're a little closer on the 200. The 200 is sitting almost where the 13 is. So now on, if you look at it that way, the 30-minute time frame daily, your 13 would equal the 200 on the daily chart. You know, so that's about how close it is to each other. They're a few cents apart, but 200 still sitting way up here as your resistance, and your 50 still way down here as support. But all these lines are coming closer together as you get further in your time frame. Let's go down to where everybody likes to intraday and sit on this 1 minute time frame, which I personally don't like, but that's, you know, to each their own. And look, I don't even see them. I see the 13 up here. There's a 13 moving average way up there. And let's see, how far back do we go until we touch that again. I mean, look at all these lines. This is your 50, there's your 13, there's your 200. So this is technically like a 2 or 3 EMA on the daily. Your 200 on a 1 minute. So just to give you an idea, your moving averages can actually put you in jeopardy, because look, you're going down, you're going down, you're going down, you're going down. But then, to me, if you look at it from another perspective, you start going back in time, you're starting to come up, you're starting to come up, you're getting ready to come up because you're coming off of this support here. You know, this is buying low. You're coming off of support. I don't want to break below that. You've already had a double bottom here, right here on this area, and it's wanting to push up, consolidate, see if that support is real, and then it wants to push back up. You know, kind of like right here, it pushed down, found some support, actually at where that old 13 EMA was. If you look back here, come back up, come back down, come back over where that 200 is sitting on the daily here, and then it's wanting to, you know, find the support way back here. So this is the support line going all the way back from way over here whenever it first started moving up, you know, which gives you a good perspective that it don't want to come back down into these lower ranges right here. You know what I mean? So it's wanting to stay out of this 53-cent level all the way up to $1 level. Okay, so that's how your moving averages can mess you up, because in one way they can look like they're pushing you down, and they are, but then if you look at it from another time frame like the daily, like if I was to look at the daily, this is what I see. I see price pop out of the 200, I see it come down to the 50, find support twice right here, strong bars, one cancels out the other. It popped out, it's still trying to find it because it still wants to get above this. It wants to get above this. It don't want to go below this. If it goes below this, you'd be out of the trade anyways because it's already broken its main support. And then it wants to come back this direction. Okay, so it wants to get above 153. Okay, so this is just my view of how I would do moving averages. And I really do hope this helps your trading. I'm going to put out some more series of also how I put all this together, so this is just going to be one of a part. I'm going to play this live and how this plays out in a separate video. So what I'll do is I'll basically show you some different support and resistance techniques and different ways to read momentum other than just using moving averages, because like I said, your moving averages can lie to you.